everyone, welcome back to the September edition of Boothy Bites with the man himself, Mr. Chris Booth. How you going, Boothy?
I'm very well, thank you. Thank you very much for having me. And I can't believe it's nearly summer. How exciting.
Have you been out on the boat recently? Warmer weather, boat weather?
Yes, I have. So if you follow me on Facebook, you'll see I only post good posts on Facebook. You don't post doing the shopping or the housework and things like that. So, but sailing certainly posted. And yeah, look, me and my mate got out on the weekend and did a spinnaker sail for one of our first times on Shade, which was pretty cool. So yeah, and spinnaker's the big sail, the big complicated sail. Anyway, yeah, had a great sail Saturday. Got a bit of sun, had a beer, sailed.
Very nice. Very nice. Well, now let's get back to business. Enough with sailing. So first up, let's talk about the RBA's cash rate decision. So your thoughts on that?
Yeah, well, I mean, look, it was Lowe's last hurrah, which is good. So I think sort of, his exit, and then we've got a new governor of the RBA, and I forgot her name, and I should know it. But anyway, we have a new person joining. So, that's going to be a different sentiment. We've got some different rules to engage as well. So probably not going to be as many meetings and things, which is all going to be fascinating going forward. But retrospectively, I think this year we've been waiting for inflation to calm down, which it progressively has been coming down, which has been great, and that means that the interest rate rises that we've had have had an impact there too. Obviously, we sort of worked through some of the coronavirus impacts as well on inflation, and it was really nice to see that inflation figure come down. So that was the primary goal, or that is still the primary goal of the RBA, and that's meant they've had a bit of a breather there with that sort of retrospective data, which is cool. On the flip side of that, when we rise interest rates, consumers are impacted, so we've got problems now with some consumers who are really struggling to afford just their day-to-day living, including their home loans and things like that. So, extra discretionary spending, that's really fallen down. So you're seeing, retail sales a lot slower. The impact of the costs associated with building and renovations and refurbishing homes and things, that's really slowing down. So the next sort of thing that the RBA has got to work out is, with that slowdown, there's a contraction. And will they need to reduce interest rates to stimulate more activity and a little bit more confidence in the market as well? So yeah, it'd be an interesting sort of next few months. But 4.1% is the cash rate. I think we'll be 4.1% next month. I mean, there's no sort of noise or news on the horizon which can really sort of impact that short term. And what that's meant is that the yield curve, so the interest rates that we're forecasting, has gone from just a normal curve, which is sort of low interest rates down here, high interest rates up here. We've now got the long-term interest rates come back to the same as the short-term interest rates. So we've actually got what's called a flat yield curve. And what that means is that for borrowers, the interest rates associated with that, we've got cheaper fixed rates than the variable rates, which again is quite interesting. We haven't had that sort of anomaly in cheaper interest rates for fixed rates for a wee while. So anyway, so that's the RBA. But we've got a breather.
What an interesting time, though, and there's no denying that we're all feeling the pinch in one way or another. So it'll be interesting times ahead.
Yeah, definitely.
And so what's the latest with various bank rates at the moment, and also some of the services on offer?
Yeah, so look, I mean, the lenders are really, we're in this kind of new norm now where interest rates are actually they're transparent. We can see exactly whose variable rate is the same. Because before, when interest rates were going up, some of the rates were changing, some weren't, and it was a bit confusing. But right now, we're kind of in this sweet spot where we can actually compare like with lenders. So, the good thing about that now, from an advice perspective, we can see what the cheapest rates are for clients, which is wonderful. Second to that, we now can see what the cheeky rates are, which some of the lenders are out there are starting to claw back a bit of their interest margin. So making no names or giving no names, but like the larger banks, they seem to be cheekily increasing their interest rates outside of RBA cycle. So we've seen a couple of interest rate hikes being 10, 15 basis points on variable rates, etc., just to increase that. So, it's worth getting a review right now on your interest rates, which it always has been. And some of the appetite to lend right now, the best interest rates are always going to be your low loan to value ratio home loans with strong servicing. So, our prime lenders like Macquarie Bank, ING, Suncorp, they're offering some really discounted rates for those low loan to value ratios and others. And there's still a wee bit of the cashback market out there as well, $2,000 or maybe sometimes $4,000 to refinance. But a lot of that sort of fight for refinance market has really gone. And in fact, we've got a few more people who are actually actively looking to buy property right now, got pre-approvals and finding homes as well, which is really nice. So it's cool, And then lastly, affordability with our lenders is very different. So the credit policies with which we're working with are quite different, and affordability certainly is one of those big factors when looking at a client situation. So maybe you're with your current bank, and to demonstrate affordability today is very hard with that bank's policy. Having said that, though, if you did look to move and go to a different lender, their policy and ability to demonstrate affordability is very different, and then that's some of the considerations for us recommending different lenders as well. So solutions based, but certainly number one, get an interest rate review to get a better rate. And number two, let's look and see what eligibility you have with other lenders too, yeah?
Nice. Love the workarounds. And so what are some of your favourite lending offers available at the moment?
Yeah, okay. So I've got to just quickly open my email, but first one first is Bank of Sydney. They've got a really cool 5.64% owner-occupier P&I variable, which is extremely cheap. Bank of Australia, they've got a 3-year fixed. Like I said before, some of the fixed rates are lower than the variable. So they've got a P&I 3-year fixed 5.54%. Stumbling over my words because it's so cheap. For our investors, we've got variable P&I and interest only at Firstmac for 5.74%, which is, Firstmac are a great bank and a good lender too. And lastly, we've got Bank of Australia at 5.64% P&I or 5.84% interest only rates too. So I think they're 3-year fixed rates from memory as well. So again, like I said before, if you're paying over 6% on your interest rates right now, it's really time to actually do a quick check-in with your broker and do that review as well, yeah?
Nice. And so let's now talk about some niche products. So you've mentioned aged care loans and also the deposit boost loan. Can you talk us through those a little bit?
Yeah, so I think importantly for us, we do home loans and investment home loans very well, right? That's our vanilla stuff. But as a mortgage broker, we've got access to over 60 different lenders. That's home loans and investment home loans. We've got 40 different commercial lenders as well. But also within that sort of pot of lenders, we've got a variety of different sort of niche products. And we work with a lot of financial planners, and those financial planners have a lot of elderly clients who've got some mature wealth. But potentially a lot of those clients own a property, don't want to sell that property, but have to make that change from living on their own and having that independence at home to moving into an aged care facility where they get some support. And that comes with a lot of costs. Now, to borrow, if you're an elderly client, is difficult because you don't have any income and potentially you don't want to dip into some of the savings and investments that you've got to do that. So La Trobe have got a particularly niche product to actually help support that process. So they will allow you to utilize some of the equity within your own home, borrow some money, and that money then can be utilized to get you into the aged care community and also pay those ongoing costs. And importantly as well, you can actually capitalize those costs of the loan on top of the loan. So you don't actually have to make any repayments if you don't have the ability to do so. And you get up to 7 years to sort of manage that facility as well, which is pretty cool. Now, sadly, sometimes in these situations, that person may be in a pretty difficult time, and it's always difficult for family to manage those financial arrangements. So this is one way to do that. And if the family member does pass, well, then again, you've got some time and some flexibility to manage the sale of that property in accordance with the estate and estate planning as well. So really good sort of niche solution, but helping clients who are vulnerable and in need of help, whereby they don't have access to cash, but access to a big asset being a home, to get that cash and have a bit better quality of life too. So one niche one, and the other one, own home. I really like this one, and I forgot what it was. Was it deposit boost?
Deposit boost loan, yeah.
Great. So I actually went to a party about 2 years ago, Christmas time, sorry. And I met all these young guys, all these kind of young go-getters. One of them was the guys from Quickly who've got this really cool serviceability calculator. They're go-getters as well. But another business at the time was a company called Own Home. And they were coming up with really cool solutions for people who have got high income but don't have deposits to get into that first home. And we reconnected just recently with the CEO there. What was his name? Yeah, anyway, I reconnected with one of the guys at Own Home, and he talked about one of the new iterations of Own Home. And what that is basically for clients who've got strong income, have no deposit, they will do 2 loans for that client for 100% of the purchase price of that property to get them in their first home. So one, it's got to be a quality property. Number 2, you get a prime lender who will lend 80% of the value of that property. Own home then go ahead and lend the balance, being 20% of that property. And then lastly, the client has actually got to engage Own Home to go do the buyer's service around finding that. So you'd meet with Own Home, you talk about the property that you want, but then Own Home would go away and help source that property. And you do have to pay a fee for that. Now, because you've got the blended first mortgage and second mortgage for the facility, the blended interest rate is higher than a normal standard variable rate. But nonetheless, if you're a high income earner looking to stay in, the eastern suburbs where I started out and looking to buy, $1 million or $1.5 million place there, you're outside of the first home grants, you're outside of all the benefits that you can get from that, and it can still get you in a good home in the location you want to be. And all you've got to do is save up the stamp duty, being sort of $30,000, $35,000, $40,000, whatever it would be, just to get you into that property, which is way easier than saving all of the rest of that money. Also, you avoid lender's mortgage insurance as well, which is a huge cost and a huge burden as well. So it's a real niche product. The second part about it is it's not just for first home buyers. It can be for people who are buying a family home at a later stage in life. They may well have had one, got separated, starting out from scratch, don't have savings. It might be me in a few years when Kelly kicks me out. So, I can utilise this. Hopefully I'm earning some good money and I can go buy myself a place to live in, as I've handed all my cash and all my assets to Kelly to keep her happy. So again, I can see there's a space. I can see there's a space for this type of service in the future. Anyway, a couple of great examples there, but I'm sure there's more utility for Own Home as well. But really niche product, and I promise you, I'm not trying to divorce Kelly. It'd be her trying to divorce me. Okay, I can't get any better.
Oh my gosh, that's why we love you. And so, okay, moving on to my favorite part of Boothy Bites, your property updates. So what have you noticed happening in the market recently?
Yeah, so I think it's still hot. So there's plenty of demand, plenty of people out there buying, which is great. Supply is still not opened up yet. Interestingly, though, we work with a business called Sale Funder, which they finance the advertising costs associated with listing of properties, and we get to work with those clients going through that sort of transition period and sale. There's been a swag of clients who are putting up their properties for sale right now. It's been very noticeable. The volume of those listings is certainly picking up. So, my forecast is still that it stands. I do believe this spring period running into summer, we'll see volumes of sales picking up purely for the the pressures around managing extra debt and interest costs associated with debt. So, that with that extra supply, it should meet demand, and we'll start to see some calming of prices. In fact, interestingly, we've seen an increase this year in all the major cities, Sydney, Melbourne, Brisbane, in property values, and that's purely been that sort of low supply, high demand, and an increase in prices. And in fact, just recently, we've had a few clients who've purchased, the options have been so strong that they've had to, kind of been motivated to purchase and put in higher bids than what they thought. They've won the property. We've got a valuation on that property and it's been less than purchase price, which has been the first time in quite a few years. So just be mindful when you go into those auctions or putting pre-bids in. We're at that stage now where potentially the valuations of these properties are going to start to turn a little bit, and that may impact some of the credit and decisioning around valuations, yeah?
Nice. So make sure you're surrounded by the pros, hey? Get it right the first time.
That's exactly right. Do you know anyone?
You know someone. And so let's just finish on what's happening at Lydian HQ. What's the latest?
Well, that's a great segue. Do we know anyone? Well, the Lydian family is growing. Woohoo, the pride. So we're really super stoked. This year's been great, so we've worked really hard. We've got some fantastic partners nationally. We're getting some great results for our brokers who joined us early on. But because of the demand for partnerships and the platform that we have now for brokers, certainly we're getting a lot more interest and a lot more support from new brokers joining Lydian, which is wonderful. So we've been able to recently put a new broker on in Sydney, a guy called Michael Short, and he fits in really well. One of our Sydney-based brokers has moved up to Brisbane to work with some partners up there, so that's great. So we wish Darren well, but he's still in the pride, and the family's just running the office up there. We've also got a new broker down in Melbourne, Pinnakin, who's joined us as well. So we've got Michael, Pinnakin, I'm missing people.
And Talia.
We've got, Talia, yeah. So anyway, so Talia's already running hard anyway. So Talia up in the sunny coast, and she's joined us as well. And excitingly, we hope to have someone plugged into the Gold Coast area very shortly. So On that note, we need a broker in Newcastle. If you've got anyone, family, friends who want to be a broker in Newcastle, that's a good spot for us. West Sydney, okay, if you want to be the king of the West out in Parramatta, Penrith, we've got a space for you down there. And then lastly, South West Sydney as well. We've probably got a bit of a corridor there for some space to get brokers started. But look, we're a team of 16 brokers right now, which is great. And we've got plenty of great people to help clients. So we are genuinely a national business. Sydney, Melbourne, Brisbane, Adelaide, Perth. Oh, we need someone in Darwin as well. Have you got someone in Darwin?
I'll get on the phone, see what I can organise. Maybe another Jackie for just Jackies. Well, Boothy, thank you so much for your time. I can't believe that it's September already. We're doing this update, and within 5 seconds, we'll be doing October again. So thank you for your time. Love chatting to you, and we'll see everyone next month.
Yeah, thank you, Jackie. See you. Ciao, ciao.
Bye.